Hi there, welcome to The Trade. Nice to have you here with us. Let's get you across what people are keeping an eye on internationally. And new Canadian Prime Minister Mark Carney has called a snap election for April the 28th to deal with the threat posed by U.S. President Donald Trump's tariffs, saying wanting to break us so America can own us. And a U.S. delegation will seek progress toward a Black Sea ceasefire and a broader cessation of violence in the war in Ukraine when it meets for talks with Russian officials today after discussions with Ukrainian diplomats yesterday. Ukrainian and U.S. delegations discussed proposals to protect energy facilities and critical infrastructure, Ukraine's defense minister said, part of a diplomatic push by U.S. President Donald Trump to end 3 years of war. Well, let's get across what we need to know to find out what's hot and what's not. And for that, the one, the only Louise Bedford from the Trading Game joins me now. Hi, Louise. Nice to see you again. How not hot? How cold is it out there, Louise?
Oh, well, there are definitely some warning signs. There is no doubt. Let's have a look at that first chart because it really does display exactly what's happening. The All Ords is underneath its moving average, which is so unfortunate because we were just getting used to higher highs, weren't we, Nadine? But no, it has given up. So you can see where I've circled that previous area to beat, but we are underneath the moving average and the volatility is low. So my macro is off at the moment. What the macro is, as you may remember, is it tells me whether I'm allowed to trade for that particular week or not. So for the moment, it's not entering into new positions, but it's leaving the existing positions to play out. So don't just knee-jerk out of those existing positions. Definitely hold on and wait until they hit their stop.
Okay, so we've got the volatility being quite low there. Because it doesn't feel like it's low out there, Louise.
Yeah, it is interesting, isn't it? I do think it can be quite deceptive. We do have a volatility bias within all of us. We consistently overestimate the amount of volatility in the market. Now, it is fascinating because what that means is it triggers us into a risk aversion and we think, oh dear, we could get hit here. So I do think it's very important that we look at the actual percentage. For the All Ords, it's only 2.49%, which means it can go up or down by 2.49% in a week for it to be actually expected behavior. So it isn't very high at the moment. In the past, it has been over 8% during very volatile times. Anything under 5% is considered not volatile.
Well, I'm glad I asked. Thank you very much. All right, let's get to, I guess, some of the sectors here locally and find out whether they are hot or not. One that has been coming under pressure when we see the same thing in the United States is infotech. What's your verdict?
Oh, absolutely. Have a look at this. This is a complete change of direction here. Following the Nasdaq, we are now below the moving average. That's a 30-week moving average, so a nice medium-term moving average. We've got that classed as cold now because it has had more than 1 week from the relative strength comparison underneath its moving average. And of course, it's underneath its own moving average as well. So look at those red candles. Oh, dear, dear, dear. So now is the time to not get involved with new infotech stocks. If you're in them, stay with them until they hit their stop. But just know that this sector is looking cold at the moment.
Oh, okay. So we will be staying away from that one. Is there, another sector that might be looking a bit better than that one?
Well, there definitely are. And this is the good part about having a very objective method to be able to determine whether something is hot or not. So everybody's welcome to collect my new report. I update this for AusBiz listeners at tradinggame.com.au/hot or not. And you can see every single sector that is hot and cold and make up your own mind there. But if we have a look at the next sector that I've popped as in limbo, which is the ASX 100. Now, why is it in limbo? It's because it isn't 5 weeks above its RSC. with the moving average, and it's not 1 week below, it's sort of right on. So we've got the ASX 100 performing at roughly the same level as the All Ords. So it's almost like nothing to see here move on. It's fascinating to see how these things pan out in real time.
Yeah, okay. And hot? I mean, are we hot anywhere?
We do have a slight hot sector here. It is consumer discretionary. However, we must remember that this is in relative terms. If you had have seen this chart as a technical analyst and you hadn't been comparing it to the All Ords, this would not be considered hot. So even though, yes, it is under a technical definition of hot, it is underneath its moving average. So there isn't a lot to report here suggesting a lot of bullish strength in the market.
Got it. Now, I alluded to Wall Street. Oftentimes we follow the leader. I think that's pretty fair to say. So when you look at the Nasdaq 100, what can we read into the fact that you find it in limbo?
Yes, and isn't it rare that it is in limbo? So often the Nasdaq is outperforming our All Ords. So we're underneath the moving average at the moment, and from a relative strength capacity structure there, we're right in terms of the same moving average. So we are exactly in limbo. It isn't hot, it isn't cold, it doesn't qualify as either. And in terms of some concerning signals, you can see them right there on the chart. There's quite a few weeks of downward behavior. And just at the very end there, we do have a slight hope that it is bottoming because we do have a lovely little doji there for those of you that know candlestick terminology. So there is a chance that it will at least hesitate. And if it goes down after that, then it will be a very strong bearish sign.
Ooh, okay, so that is a watching brief. How does it compare to the S&P 500?
Well, the S&P 500 is actually a little bit more stable. This is the hottest out of the three indexes that we've had a look at. But again, take that with a pinch of salt because we're underneath our moving average. But if you have a look at that blue line on the lower panel of the chart, you can see that that has consistently been outperforming its own moving average. So if you're looking for somewhere and you're absolutely desperate to pop your money somewhere at the moment, it would be in the S&P 500. And just remember as well, buy these shares in the S&P 500 and in the Nasdaq going down, it's not necessarily a bad sign. We don't want things going up like a rocket forever and ever because that means that they have nowhere to rest down on to provide support for future price activity.
All right. Well, hot or not, in limbo, there's a little bit of something for everyone, I suppose. Really interesting times. Always good to have you join us, Louise. Thank you.
Thanks so much, Nadine.
Take care. Louise Bedford there from tradinggame.com.au. That's this episode of The Trade. We'll see you tomorrow.